Robert Kiyosaki identifies factors that are threatening the global economy and could trigger a massive crash. The first critical factor is the persistent disruption in the global supply chain, impacting diverse industries and sectors. Kiyosaki asserts that shortages in essential raw materials, labor, and efficient transportation are driving widespread price escalations. He cites instances such as the soaring costs of lumber, steel, copper, and oil. Additionally, he holds the government accountable for enforcing lockdowns and restrictions, disrupting the customary flow of goods and services. Kiyosaki underscores that inflation has evolved into a pervasive challenge, warranting proactive measures from investors. He contends that the systemic nature of inflation demands a strategic approach. He voices apprehensions about the broader economic system, emphasizing that inflation has become deeply entrenched. Kiyosaki frequently voices criticism towards President Joe Biden, his administration, and the Federal Reserve, attributing high inflation rates to their policies, which he believes are undermining the stability of the U.S. dollar. Another significant factor is the unprecedented surge in money supply orchestrated by central banks worldwide, with a particular focus on the Federal Reserve in the United States. Kiyosaki argues that this influx of currency fosters inflation, devaluing the purchasing power of individuals. He further posits that it inflates an artificial bubble in the stock market, fueled by easily accessible capital and stimulus initiatives. He foresees the eventual bursting of this bubble, potentially resulting in substantial losses for investors. Moreover, Kiyosaki emphasizes the ongoing inflation crisis, eroding the dollar's purchasing power while driving up the costs of goods and services. He attributes inflation to the excessive money printing undertaken by the Federal Reserve and other global central banks. Additionally, he critiques government spending on stimulus programs, contending that they have failed to invigorate the economy. Kiyosaki's prognosis includes expectations of heightened interest rates, diminished profits, and lower stock prices as a consequence of inflation's persistence. One prominent factor is the escalating debt levels incurred by governments, corporations, and individuals. Kiyosaki subscribes to the view that debt represents a form of financial servitude, contending that a considerable portion of the population is living beyond their means. He issues caution that mounting debt could reach unsustainable and unmanageable levels, especially as interest rates climb and economic growth decelerates. Moreover, he expresses concerns that the burden of debt may trigger social unrest, civil conflicts, and geopolitical confrontations as nations grapple with their creditors. Kiyosaki further underscores the looming banking crisis and anticipates that one of the world's most influential central banks may be in jeopardy due to its substantial exposure to derivative markets, with specific reference to the Bank of Japan. Kiyosaki has long held bearish sentiments toward the financial markets and, as early as 2021, predicted the onset of the most substantial crash in global history. He emphasized the inevitability of rising interest rates, puncturing inflated asset valuations, including stocks, bonds, real estate, and the U.S. dollar. Kiyosaki maintains that soaring interest rates will place immense pressure on asset prices, including the vast derivatives market. Furthermore, he singles out the Bank of Japan as vulnerable due to its deep involvement in the derivatives market. Criticizing the Federal Reserve's policy of interest rate hikes, Kiyosaki accuses Jerome Powell, the chairman of the Federal Reserve, of downplaying the impact of such rate hikes on inflation. Kiyosaki issues a dire warning concerning the prevailing pension crisis, likening U.S. pension systems to an impending bubble that is at risk of bursting, drawing parallels to the downfall of Lehman Brothers, a significant investment bank. A central factor of concern is the intensifying geopolitical tensions and conflicts, which could potentially escalate into a global conflict. Kiyosaki particularly highlights the situation in Ukraine, where Russia has amassed a substantial military presence near its border, raising the specter of a major confrontation between two nuclear-armed powers. He also alludes to the possibility of a conflict between China and Taiwan, which could involve the United States and its allies. Kiyosaki underscores the adverse economic impact of wars, characterizing them as detrimental to business and conducive to inflation. Another significant concern is the ongoing conflict in Ukraine, which has escalated in recent days. Kiyosaki suggests that Russia is attempting to annex more territory from its neighboring country, thereby causing instability in the region. He also criticizes the perceived weakness and ineffectiveness of the United States and NATO in responding to Russia's aggressive actions. Kiyosaki predicts that this ongoing conflict could eventually escalate into a global confrontation, with the potential involvement of nuclear weapons. One crucial element to consider is the rise of new technologies and innovations, which have the potential to disrupt established industries and business models. Robert Kiyosaki points to technologies like artificial intelligence, blockchain, biotechnology, and renewable energy as forces forces that can bring about both new opportunities and new challenges for the global economy. He strongly recommends that individuals adapt to these changes and acquire skills that are pertinent for the future. The increasing popularity of cryptocurrencies, particularly Bitcoin, holds significant appeal for Robert Kiyosaki, who regards them as a safer haven compared to government fiat currency. Kiyosaki posits that cryptocurrencies are disrupting the established control of central banks and governments over money creation and distribution. In his view, cryptocurrencies empower individuals to function as their own financial custodians, safeguarding their wealth from the perils of inflation and confiscation. Kiyosaki does, however, express a cautious outlook on the present state of Bitcoin, believing it to be in a speculative bubble, entailing some risk. He recently conveyed his perspectives on the price trends of various financial assets, including gold. He exhibits confidence in the upward trajectory of these assets. Kiyosaki envisions that once the price of gold surpasses the $2,000 mark, it is poised for substantial growth. He boldly stated, "Gold will soon break through $2,100 and then take off. You will wish you had bought gold when it was under $2,000. The next milestone is gold reaching $3,700. This suggests his anticipation of a significant rise in gold's value in the foreseeable future. Kiyosaki actively promotes alternative assets like gold as a hedge against inflation. Inflation erodes the future purchasing power of money, implying that the same sum of money will buy fewer goods and services as time progresses. By investing in assets such as gold, which tend to preserve or even appreciate in value during inflationary periods, investors can shield their wealth from the eroding effects of rising prices. Robert Kiyosaki recently offered insights into real estate investing and the potential risks of a market downturn. He emphasized several key points for real estate investors to consider. Kiyosaki advised newcomers to the real estate field to proceed cautiously and gain knowledge before embarking on significant investments. He cautioned against the pursuit of quick riches in real estate, as he believes that such a hasty approach often leads to adverse outcomes. Kiyosaki has also voiced concerns regarding the short-term rental market, suggesting it could be a harbinger of a real estate downturn. He pointed to Airbnb as an example, noting that in New York City, the number of short-term rental units has declined significantly, approximately 70%, following the implementation of a new law. This law mandates that Airbnb property owners must register with the city if they intend to rent their homes for periods shorter than 30 days. The imminent BRICS summit, scheduled for August 22 in South Africa, has drawn Robert Kiyosaki's attention. Kiyosaki postulates that the BRICS coalition, consisting of Brazil, Russia, India, China, and South Africa, will unveil a novel digital currency supported by gold at the summit. He anticipates that this development will significantly impact the standing of the US dollar and the broader global financial system. Furthermore, Kiyosaki envisions a scenario where more nations opt to align themselves with the BRICS alliance, potentially forsaking the prevailing US-led international order. The BRICS countries have been discussing the potential introduction of a new trading currency backed by gold. This concept has garnered interest from an increasing number of countries looking to align with BRICS. The initial tweet was removed, but it piqued the curiosity of Robert Kiyosaki, the renowned author of Rich Dad Poor Dad and a vocal critic of the US dollar. Kiyosaki has consistently warned of the impending collapse of the US dollar due to extensive money printing, escalating debt levels, and geopolitical tensions. He has urged his followers to consider alternative assets like gold, silver, and Bitcoin as safeguards against inflation and wealth confiscation. Kiyosaki has offered predictions that the BRICS summit will play a pivotal role in reshaping the global economy and possibly signal the decline of the US dollar as the world's primary reserve currency. He has posted tweets emphasizing this scenario. August 22, 2023, in Johannesburg, South Africa, BRICS nations announce gold-backed crypto. US will die. Trillions of US rush home. Inflation through the roof. Giant crash coming. Fake money aka. Fiat currency to die. BRICS meeting in S Africa, August 22, to put the nail in the coffin of fiat, fake money. Gang warfare. August 22, 2023, approximately 41 nations, possibly even France, gang up in South Africa to de-dollarize the world. Proposal: BRICS nations will launch BRICS their money. Leslie Mastorp, Vice President and Chief Financial Officer of the New Development Bank, NDB, commonly referred to as the BRICS Bank, has clarified that the creation of a common currency isn't an immediate agenda item. He stated, "Developing an alternative is a medium to long-term long-term ambition. Presently, there's no indication that BRICS will introduce an alternative currency. Our primary focus is to strengthen the use of local currencies among member countries, which will, over time, reduce our exposure to currency devaluation when borrowing in dollars. For instance, similarly, Anil Sukal, South Africa's Deputy Director General for Asia and the Middle East at the Department of International Relations and Cooperation, DIRCO, confirmed that a BRICS currency is not under consideration for the upcoming summit. He remarked, "There are no plans for an alternative to the US dollar at this stage. Hence, it seems improbable that the BRICS summit will announce a gold-backed trading currency in the near future. However, it's plausible that the BRICS nations may explore other avenues to strengthen their economic collaboration and decrease their reliance on the US dollar. This could involve an expanded utilization of local currencies in bilateral trade and investment agreements, or an increase in gold reserves as a safeguard against currency fluctuations. In any case, the BRICS summit remains a significant event for the global economy and geopolitics. It underscores the mounting influence and aspirations of emerging powers in shaping the global landscape. Furthermore, it reflects their common interests and challenges in addressing the consequences of the Fourth Industrial Revolution and the COVID-19 pandemic. In conclusion, Robert Kiyosaki has identified and discussed several critical factors that pose threats to the global economy and could potentially trigger a massive financial crash. The future remains uncertain, and staying informed and prepared is crucial in these dynamic times. Thank you for watching, and we hope you found this overview of Robert Kiyosaki's insights valuable in understanding the current economic landscape and the potential challenges it may present. Stay tuned for more updates and analyses on critical global issues.